Hello traders, Steve Ganz here, and I want to walk you through a possible step to consider on the NVDA calendar spread. Obviously, when NVIDIA jumped the way it did, we take a look at a chart here. NVIDIA went from 660 roughly the night of the earnings report, jumped all the way up to 750 and then continued to run from there. I mean, this is a massive, massive move over a 2-day period. So understandably, that blew totally out of the upside of the calendar tent. And it's up here now looking at essentially max loss in this trade. Now, what is going to happen on this? A couple different possibilities that traders can consider. If we look at our two options, we look at the one that expires here at the end of the day today. This is a short, in this case, 695. Of course, that is essentially worthless. So I'm going to go ahead, I'm going to buy to close that. I'm buying to close all of them for a penny. So I buy to close that. Now, this is the risk that I currently have in the trade. And of course, you know, NVIDIA is trading all the way up here now in that 800 range. And it's highly unlikely that it will get back down here below my long put, which expires next Friday at 695. So I can do a couple of things here. This still has some value to it. I could come in here and just close this out as well, selling this for about $75 and reducing what's looking to be my current loss here. That would equate then to the max loss I was expecting when I entered this trade of around $300. Now, I'm going to say that there may be an alternative possibility here depending on your opinion of NVIDIA and of the market. And that alternative might be to sell a short put against this long put, basically turning this into a spread. So if I come back and look at my NVIDIA chart, if NVIDIA were to pull back, and it's not out of the question that early next week maybe it could pull back to 750, 725, somewhere in that general range. I certainly wouldn't expect it to pull back below that, and it may not even pull back that at all. Let's just take its current location at approximately 797. So if I wanted to sell a put against this long put, I can come in here and I can say sell a put, and it's going to go out to the next expiration, and that's going to create this spread. Now, this is a big spread, just to be clear. I am essentially saying that if I sell this 800, which I would not personally sell an 800, but let's pull this back. Let's say I sell a 750. I can take in $4.05 or $405. That will largely offset that loss that I have, and so long as NVIDIA stays above that price, that 750 price, this thing will expire with a little bit of profit to it, not much. But in exchange for that, we can see, let's just go out here to expiration on this trade, we can see that I am taking on pretty sizable downside risk. I'm taking on $5,500 in downside risk here in order to pick up this extra $405. So this is where a trader has to kind of look at this situation and decide, is it worth it to me? How strong do I feel about NVIDIA staying above this 750 point? Or you could take a slightly different approach, and that is do nothing about this yet. Wait and see come Monday. If NVIDIA were to sell off, let's just say NVIDIA sells back to 770, somewhere in that range. If we get to that point, I may be able to come down and sell a 730, which is going to give me a lot less risk to the downside. And if we get a sell-off, I should be able to sell that for about that $4 or whatever, depending on how deep or hard that sell-off is. So that may be a possibility in this trade. So I'd look at maybe selling a 750, a 760, a 770 today but know that I put in a big downside risk here if NVIDIA were to totally tank. So that's a way to potentially consider trading this. Now, I could even carry this one step further if I wanted to. And much like you've seen in the SPY start to finish trades that were done recently, I could even add a call spread above this. So I could come in, essentially turning it into an iron condor. So I could come in and say, I'm going to sell a call, and maybe I sell that call up here at 850, but I don't want unlimited risk to the upside. So I'm going to buy a long call to essentially act as my protection up there. And I'll buy that long call, maybe at 860. And, and I could do this, of course, at any location. I could turn it into an equal-sided condor. And you can see I can pick up a fair amount of extra juice by doing that. But I am taking on, in this case, upside risk. And of course, the closer I move that to the current market, the more money I'm going to get for this. But I'm also then increasing this upside risk unless I move this down along with it. So I could do something along these lines, again, essentially turning this into a pretty good sized condor. So those are a few different possibilities that a trader could consider when something like this calendar goes against them, and we just have the one long strike out there in the future. So I'm going to go ahead, I'm going to save this trade. I will call it Cal to Condor, and it's one of our start to finish, and I'm going to basically save this as a new trade so that I can go back and show you a comparison late next week. I'll copy the link, I'll share it in the notes down below. As always, please give me your thoughts. If you like this content, etc., give a thumbs up on YouTube. I greatly appreciate that. And that will wrap up this possible adjustment to consider in the start to finish series.